I can see that we've got many people joining, well over 200 already. And it's really exciting for me to welcome you all to this afternoon's session, where we're going to be talking about FinTech and the future of money. So thank you all for joining us. This is the latest in our series of Alumni and Friends webinars. And we've discussed a range of topics as diverse as the future of fashion and careers in the third sector. So you won't have met me so far. My name's Professor Carsten Maple. I'm a Professor of Cyber Systems Engineering in WMG at the University of Warwick. So I guess to some of you might think, what is Cyber Systems Engineering? Well, I guess what I say is that it's engineering trustworthy systems. So it's engineering systems that can be secure or private or resilient. And resilience is particularly important in this day and age. I'm pleased to lead the Academic Centre of Excellence in Cybersecurity Research, one of only 19 such centres in the UK. And I lead that at the University of Warwick. It's a fantastic group of people in that research centre, covering people from political science, from mathematics, from engineering, and from cybersecurity, to name a few. But I'm also Deputy Pro-Vice Chancellor, charged with leading our strategy in North America. I'm really pleased that the university recognised the importance of internationalisation to ensure the relevance and impact of the research and education we offer. There are great opportunities for collaboration, and I'm really pleased that we have this strategic approach to realising these opportunities. I'm also a fellow of the Alan Turing Institute. The University of Warwick was one of 5 founding members of the Alan Turing Institute, the National Institute for Data Science and AI. And within the Turing Institute, I work on a range of projects, including trustworthy digital identity, something important to the finance sector, but also a large project working with companies such as HSBC around a framework for the adoption of responsible AI in finance. So we know that AI offers a lot of benefits, and is certainly important to making sure we drive efficiency in the finance sector that can in turn drive efficiency in all kinds of areas such as manufacturing and travel. But what we have to make sure is that that AI that's used is used responsibly. So I'm also pleased to work with colleagues across the university, including those in WBS, on a range of areas, including a recent report that we're writing for UK government, for the Department for Digital, Culture, Media and Sport, and that is around decentralised finance. In a time of global sanctions, as you'll know, and some of the recent news that Russia is asking, for example, to be paid in rubles rather than perhaps Bitcoin or euros or dollars. And we've seen some knock-on effects on fiat currencies, such as the ruble, as I mentioned, but also impact on cryptocurrencies. It's especially pertinent to consider FinTech and the future of money. Some of you may have heard of some of these FinTech approaches, such as Bitcoin. Many of you, I'm sure, hold Bitcoin. But what is interesting is how Bitcoin, a cryptocurrency that was designed to remove a central authority and give a much more stable approach to finance, was actually disrupted due to some of the ongoing problems in the Ukraine. The Ukraine was a significant, what we call miner of cryptocurrencies, and that impact of the troubles over in Ukraine actually meant that there was significantly less mining and actually made a significant impact on the value of Bitcoin and all the other associated, many associated cryptocurrencies, but that seems to have recovered somewhat. So FinTech is defined variously, but I personally like the Forbes definition. which states it's a catch-all term for any technology that's used to augment, streamline, digitize, or disrupt traditional financial services. And that's what's interesting for me, disruption. So I think you'll have an enjoyable session today with some excellent speakers. The Warwick alumni community is now more than 264,000 across the world. It's an exceptional global network with an enormous breadth of insights and experience to share. And some of those are with us today. So I'm really delighted to be joined by three panelists. The first of which is Nitin Sharma, who studied computer science at Warwick and graduated in 2006. He is currently the Chief Operating Officer of Trading at BlackRock for Europe, Middle East, Africa, and Asia Pacific, so a large remit there, Nitin. In 2016, Nitin was chosen from among 13,000 employees to receive BlackRock's Principles Award for exemplifying BlackRock's principles and culture. Nitin has also supported the development of their Sovereign Risk Index, an algorithm that ranks 51 countries by their most important factors. He serves on the board of advisors for Into University. Some of you may have heard of Into. It's the UK's top educational charity, which helps disadvantaged students across England attend university. He also regularly advises charities, including the National Autistic Society, the Child Cancer Trust, and the Royal Foundation. It's a pleasure to have you with us today, Nitin. Vera Okoji is a recent philosophy graduate and is Warwick's first student to transfer onto the new Philosophy with Work Placement degree course. She successfully secured her own placement at Microsoft, followed by a summer internship with Google. On graduating, she achieved an Outstanding Student Contribution Award for her exceptional academic performance and contribution to the university, including founding the Warwick Philosophy Black Voices Network. She's currently a FinTech analyst at Visa after earning a place on their Top Talent Future Leader graduate program. She's an avid entrepreneur and founded Lashed by V while at university, which has since launched 2 collections and been featured on Fenty.com. Vera also recently completed executive professional course in FinTech at Oxford University. And finally, but by no means least, Georgia Barboni is an assistant professor of finance at Warwick Business School. Before joining Warwick, she was a postdoctoral research fellow at Princeton University. Georgia's work focuses on innovations in financial contracts and their impact on business growth and households' financial decisions. Her research interests are in development finance, behavioral economics, and household finance. She holds a PhD in economics from the Santana School of Advanced Studies in Pisa. So the format of what we're going to do today is we're going to hear from each of our 3 speakers. And we will then ask questions that have been submitted in advance to direct the conversation. There'll be more time for audience questions at the end, so please use the Q&A function for all questions to all our speakers and the chat function for more general comments. So I'd like to start by inviting Nitin to provide an opening statement, if you would, please.
Thank you. Firstly, thank you for casting, and thank you for all the panelists with us, and thank you for inviting me to an exciting topic. My name is Nitin Sharma, and as Professor Caston said, I am at BlackRock. I was a Warwick alumni, and I moved from India to England in 2002. And it was quite funny today. Today I had a haircut, and when someone sees you after a long time, it's like, oh, Nitin, you had a haircut in the lift. And I said, yeah. And it just reminded me of my first ever haircut in England, where I had to pay £7. And in India, it used to be 10p. And I realized that it was so expensive that I had to go and find myself a job in 2002. And I started working at Marks and Spencer while studying my degree. And it made even the people who did not know me in the lift laugh that what was the price differential between a haircut in India and a haircut in England. And I think it has gone, I think maybe India's got more expensive now, but it's still very expensive. But nonetheless, I graduated in 2006 with a degree from University of Warwick and 1-year placement at British Telecom. University of Warwick had a huge, profound impact on who I am today. The professors, the students, the peers, everyone who played a role in shaping us and helping us to think independently and think in a collaborative way, and also be able to build the ability to be able to solve some complicated problems was something which I hugely took away from that experience. I started my career as a software developer, given my background was computer science, and I did that for 2 years, and actually a little bit more than that, where I was part of a fixed income group, which pretty much invested in markets across the globe. And in 2009, BlackRock made the acquisition of BGI, and that led to BlackRock becoming #1 asset manager in the world. And with that, I transitioned into a next role, which was to become a hedge fund manager at BlackRock on the fixed income side. I was very fortunate. Being the most junior in the team meant that I learned a great deal by being very smart people. And during that, while investing using a quant modeling, we also, as Professor mentioned before, co-authored BlackRock Sovereign Risk Index, which is the first approach of looking at the sovereigns around the world in a very quantifiable way. I did that for 5 years, and after that, opportunity unlocked to play a bigger role, and the firm offered me a position to be closer to the executive team in fixed income, which saw a huge growth in the ETF business, right? From a very small number to well over 2 trillion. And that was a resounding experience to learn how that is done, and how asset classes get introduced into the market and actually can change the whole perspective of how people look at investment risk. One thing led to another. I ended up in New York. It was meant to be a 4-week trip, ended up being 1.5-year trip. And again, a great learning experience, given BlackRock is a New York-based organization, but huge presence in the UK. I had another opportunity to do an algorithm with the World Bank around sovereign sustainability, given ESG is such a hot topic. And I came back to London with the role of being in the trading team of BlackRock as the COO for the region. And my responsibility now looking from a technology perspective, and how do we build scalable technology at BlackRock to run it as efficient as possible. As you could see, like from a BlackRock perspective, they managed like close to 10 trillion, about 19,000 people. And in the stock market, you will be trading anywhere from about $27 trillion. So that technology plays a huge part. And technology has always been the core component of the value proposition of what is a significant differentiator of BlackRock from the beginning, from like 34 years ago when it was invented. And as the investment landscape today is evolving, technology today is transitioning from becoming a competitive advantage to a competitive requirement. I remember back in the days, I used to look at the pitch decks back in 2009, and you would use that as your competitive advantage. You'll put 3-4 slides at the beginning saying how good our tech is. Today, that is a requirement. So you no longer need to put the tech, it needs to be a prerequisite. And companies which are not investing in technology will not be able to meet their client long-term needs. And technology remains a key area of focus for investment for BlackRock. You might have heard like BlackRock have made a lot of FinTech acquisition or investment over the years, from Cash Matrix, which simplify our cash management process, from a minority stake in iScale Capital, which is a European-based digital investment manager, a partnership with UBS and Aladdin Risk, an investment in iCapital, and acquisition of Future Advisors, all which is to kind of complement the scale which BlackRock has built. And it continues to do that to foster the growth, both internally, first by hiring more talent, building the current capabilities of what Aladdin, which is one of the largest softwares in the world for asset management, and then also looking at the FinTech landscape and see how that grows. From a BlackRock perspective, this is a huge area of opportunity, huge growth to be seen, and a lot of things would look very different in time to come. I'm well over my time. I'll pause here to pass on to the other speakers. Sorry.
Thank you very much, Nitin. Vera, could I pass to you?
Of course. So first of all, thank you for having me here. Really delighted to be on this panel as a recent graduate myself. So as mentioned, I'm Vera Kojay. I'm currently a FinTech analyst at Visa. Everyone knows us as the credit card company, but we do a lot more than that. Previously, obviously being at Warwick, I did philosophy, and probably I'm getting a lot of question marks. People are like, how did you get to FinTech? And I'll try and take you guys on a little bit of a story with that. So when I came to Warwick, you see a lot of people wanted to become investment bankers. And I thought, what is investment banking? So I then did a few internships at Barclays, HSBC, Lazard. Actually, I was actually going to do one at BlackRock as well, but I didn't want to overload myself. Really wanted to really expose myself into banking and trading and investments. Found out that actually what really excited me about finance was how tech was impacting finance. So there'd always be some kind of tech talk where all the cool computer scientists and data developers and software engineers would come and talk to us about how tech was impacting what the bank was doing or the trading floor was doing. And that is what really got me hooked. So I then went on to do a full technology placement at Microsoft. I was on the business side, so I did apply for a data role, but they told me you're probably more suited to sales. So I ended up doing a partner development manager role, which is essentially a business development management role at Microsoft, and really enjoyed that, really excelled at that. So I ended up running a business worth 187 million and growing the business by 6% while I was there at Microsoft, and really enjoyed the idea of working with other clients. So our partners at Microsoft were the likes of EY and other companies that would use our technology to then sell on to the end customer. The end customer could be the likes of Barclays, it could be Toyota, it could be anyone. But I really loved how tech would then be able to solve the problems of the customer and how another business could help solve that problem. So if you go back to me being a philosophy student, one of the big things I enjoy is solving problems. So technology being able to do that was a great way to see that happening in a real life scenario. After Microsoft, I then went on to Google to do a very similar role, but in a marketing agency format. So working with other digital marketing agency with Google Ads as a product, solving the problems from an EMEA standpoint. So whilst at Microsoft, we were focused on a UK and I basis. At Google, it was now looking at the problems that were happening in emerging markets and also happening in Europe. And I loved seeing how technology was used differently by marketing agencies in these different regions. So it not only expanded my mindset in terms of what technology can do, but also how it's impacting the world. And I'm sure we can discuss that more on this forum. After that, so coming from finance and tech, I thought what I really loved, like I said, is solving problems using tech in finance. And that's where I saw the idea of FinTech. And I thought, what's this? And as you guys can see, if you're following me in my story, I'm just always looking for what interests me and I'm going for it. So I went for that as well. And that's where I then applied for this program I'm on, which is the Future Leaders Program at Visa Inc. And I've now come into my second year as a graduate here. I've done placements in the product team, in our Visa consulting and analytics team, which I loved. I'm currently managing our biggest client. Use your imagination there, but the biggest bank in the UK, that is my client at the moment. So using my understanding of payments and strategies towards growing acquisition for their customers, how can we best solve for their problem points? So that's my focus at the moment and remit. I loved being at Warwick, and being back here, I feel it's full circle moment. I feel at Warwick, I really learned about taking challenges, opportunities, and solving problems. And one thing I've been able to do since leaving Warwick as well is also help other students. So I'm also the founder of Career Confident, which is a platform to encourage people, especially students, to go into any career of choice, whether it be FinTech or whatsoever. So I'm happy to also talk about, getting into FinTech and other things as well on this forum. But yeah, pleasure to be here and lots to learn from all you guys. I'm really happy to be here.
Thank you so much, Vera. And on to Georgia.
Hi, everyone. And I'm really happy to be here and apologize for some background noise. I'm on my way to India. And the reason for that is that I am doing research work in India precisely on financial inclusion, which somehow I feel like it fits quite well with the topics of today. So I can tell you a bit about me and how my research interests can represent a good fit with today's panel and event more generally. So I started my research in economics, in applied economics, and I soon became very interested in the movement of microfinance. Some of you may be familiar with that. It consists of the provision of small uncollateralized loans to people who have a very limited amount of wealth. And throughout the past 6 or 7 years, I have conducted research on these topics, kind of focusing mostly on what does not work about microfinance in terms of why don't we see households taking more of these loans, why sometimes they are entrapped into some debt spirals. And what I became very interested in has been like, how can we essentially include technology at large within these products, within these credit products to facilitate the lives of these people. And that's what my last few years of research have been about. Something that for people living in high-income countries may seem quite odd is the fact that, worldwide, there are still 1/3 of the people who don't have access to bank accounts. That could be for many reasons, and I'm not claiming that people are not banked just because they lack the technology for getting a bank account. But still, there's evidence that people are not financially included because it's very hard for financial institutions operating in low-income countries where the information system is not as advanced as in high-income countries. And basically, people in low-income countries may lack access to bank accounts just because financial institutions don't have the tools, don't have the instruments to identify perfectly their characteristics and offer them the right products, the right interest rate, the right repayment schedule if it's about a loan, or the right bank account or a savings product, if we are thinking about portfolios and suites of financial products at large. So in some sense, that's what I have become extremely interested in. And I think the way I can contribute to this panel today is precisely by giving you some more insights on how much AI and information technology and data science can help improve the life of people. And particularly because we have seen a dramatic increase of smartphone adoption, for instance, in low-income countries. India is one of the most prominent examples with this, doing banking, home banking through phones has become really easy. Yet there are still some frictions which somehow, if not properly addressed, can even more exacerbate these financial inclusion gaps. And I'm just like hinting at a couple of them, and then I'm happy, to receive further questions or to follow up via emails. The other two speakers, Nitin and Vera, have spoken about their experience at Warwick. I didn't do neither my undergrad or a master at Warwick, but I do supervise master students, and I'm seeing an increasing number of them being interested precisely on these topics of emerging FinTech, the space of FinTech, also low-income countries. They know what I do, so that's why they reach out to me for that. But the last thought that I want to leave now, and then I'm happy to take questions, is the fact that there is a need to somehow mitigate some of these gaps. And I'm thinking about financial sophistication, financial literacy, but also gender gaps in access to technology. Because if these are not met, if these gaps are not met, then the gains from fintech and from technology adoption will be concentrated only among one part of the population, and the other will lose even more access to opportunities, which is what fintech is about, kind of trying to mitigate as much as possible these gaps.
Thank you very much, Georgia, and thank you all for those very interesting insights and providing information on your background. I'm now going to, as I mentioned, I'm going to move to some questions that we had. So we had some questions submitted before the event, and we've clearly got a very knowledgeable and interested audience looking at the questions that we've already received through the Zoom question and answer function. So do keep those coming. We will try and answer as many as we can. What I propose to do for the panel now is I'm going to direct a question perhaps to start off at one of the panelists, but then feel free to jump in for the other panelists, because I'd like this to be a conversation, something a bit live and a bit of discussion. And I would also welcome people making comments on the chat. So hopefully I'll ask the alumni team to record that chat so that we might have that for posterity so we can consider it afterwards as well. I would certainly find that useful. So the first question I'm going to ask, and given the background I gave, you might expect it to come from me, but it wasn't my question, it was submitted earlier. But I'd like to ask, and principally start with Nitin to start the answer on this, but does fintech make companies and organizations more susceptible to cybercrime, or does it offer more protection?
It's a very interesting question. Professor, you being on the panel, it would be great to actually also hear your perspective at it. But I think cybercrime is certainly a very important topic for financial organizations. Now, whether you call yourself a bank or a fintech or any organization which is transacting with money today, and it, as the technology has grown, as the data has grown, there are always risk of cybercrimes to come. Actually, it was quite interesting given the unfortunate situation we are in right now between Ukraine and Russia. One of the biggest worry has been that could there be a cyber attack which could be done on the financial payment systems. And if that was done, then what does that implication have? Something systems like SWIFT, for example, where millions and millions of messages has been go around between settling the currencies or any asset classes to the SWIFT messages. If that get attacked, it could really actually bring the whole system down, because then you go to the physical model of actually settling between the companies, which is just not scalable and would not work. So as we grow, I think the risk of cyber crimes and cyber attacks would always, in my personal view, would always go up. But what we do hope is that equally we will be building technology which is able to understand when a situation like that is happening and how one could address. A lot of companies are coming up front now, which are looking at this from the first-hand experience and augmenting the data structures the companies have to help with that. And also, I believe, like companies like Microsoft, Amazon, Google, who are giving their cloud computing power, cyber attack or cyber security is a huge element of where they gain the edge, because you could argue that when, if the attack does happen and data gets disclosed out in public, both from a reputation perspective, but also how that data could get abused can be pretty significant. But Professor Caston, I would actually also equally, I would love your view of how you see it in your position.
Sure. I'll answer some. I'll just give the other panelists an opportunity first in case they've got anything, but some excellent insights, I thought there, Nitin, clearly from your closeness to working with banks. And as you said, it's not just banks, it's other fintech organizations. Vera or Georgia, do you want to chip anything else in, or if not, I'm happy to.
Yeah, you know what? So currently I'm actually leading on a strategic review for my client on APP fraud, for example. And I will say that it is astonishing. I knew that APP fraud, so just debunking it, that's account payments fraud, by the way, for those who don't know the acronyms. So I'm leading a strategic review on peer-to-peer payments. And we actually did an analysis which showed that in the last year alone, APP fraud has actually risen by 350% 55 million in the last year, and that's projected to grow on a 25% basis on our analysis. If you think about then what the banks have to pay, and then also think about how the banks make their money, you have to understand that the risks that fraud is posing to the banks, but only also to consumers, gives an initial reaction for me, which says that fintech really has a big part to play in actually mitigating for these risks. So actually for our client, we're now thinking about what sort of fintech partners are offering advanced and sophisticated risk score models on the P2P journey that can help mitigate against this. And I think it's that question was interesting. So I thought, yes, in one part you were saying to ourselves, these P2P payments are happening online or in-app, hence why there's an issue, but also we're going to then use digital means to also mitigate against those same risks. So it's very much a double-edged sword, and it's one that we do need to constantly be thinking about as we grow, and as the pandemic has shown us, everything is moving digital. How do we actually combat these risks, and how do we also not exclude people that are very afraid to use such means as P2P and faster payments from taking part? So it's definitely a double-edged sword here, and I'd love to hear more from yourself, Professor, as well. I need to know for my client.
Thank you, Vera. I do work with a number of financial clients too. So, Georgia, I don't know if you're able or wish to comment.
Sorry, I let you actually keep on going in the discussion, because I think you are more well placed than me for answering this.
Okay, so just to say, I didn't plant the question, but I thought there were excellent answers there, and what it really is from a technology expert, as I come from, is that thing that Vera said, this double-edged. I think you both touched on it. What happens is we often talk about security being a sort of arms race, because what happens is we advance our protections, yeah, and sometimes it's protecting a system, other times it's noticing if somebody's within a system. So it could be some intrusion detection system, so some machine learning approach that notices anomalies, often used in fraud, for example, but also anti-money laundering, for example, these techniques, and they protect us sometimes after the fact, sometimes before the fact. But as we start to have this wider thing about fintech, what we've got is decentralized currencies, for example, and there are approaches to having central digital currencies. The Bank of England has got a working group that I sit on around this area and looking at its own position. But the thing is, what we've got is, as technology grows, you've got an increasing threat landscape, more people wanting to attack. It could be people for gain, so-called ransomware is growing a lot, so they could try to take out networks such as Swift. Swift will have loads of attacks on it all the time and be very resilient. So you end up with this sort of arms race. But the thing at the end of the day that's really important is a term, and it's important in the COVID pandemic, is the word resilience. That's what we have to have. And that's what we have to have if we look at what Georgia said, really interesting about Africa. I've got some work funded by the Bill and Melinda Gates Foundation. We've got to make sure that if we introduce this technology, it's resilient in the circumstances in which it's used. It's got to, because you can't have people relying on just technology in some rural parts of India or Africa if it's not as resilient. So, I think you gave, if I was marking you up there 9 or 10, but definitely first-class responses. Thank you. Maybe I'll have to do some work with you. Do some research with. So I've got another question, and it's really interesting that came in, and I just add something first. At the University of Warwick, we are involved in something called the Data Science for Social Good program. It's a great program for those of you that are students or those that are alums and want to get involved in sponsoring Data Science for Social Good. There's a great program that we're involved in. And the reason I mention that is because there was a question here, and I'd like you to start the lead on it, if you would, Vera, which is, how can fintech be a force for good and societal change, including ensuring that certain members of society are not left behind as a result of these new technologies? So related to what I just said?
Yeah, no, I think it's an excellent question. And I think this is what really excites me about FinTech, if I'm honest. So at the core of it, I feel that FinTech strives to remove the barriers of exclusion in society via finance. So you think about, we said digitalization, but also the fact that a lot of these FinTechs, particularly the neobanks, are taking back the power back to the consumer. You think about the in-app experience, for example, everything is rooted around what matters for you. So tracking your payments, for example, or helping you save, educating you as well. And I think one thing that obviously biased towards the fact that I work in payments is that think about how digital payments is increasing. We actually see that by 2025, you'll see 1 trillion in transaction value happening across all payment networks in the world, just with digital means. I think that's exciting. And I think that that's only yet to grow more and more. So it's bringing back power to the consumer, enabling ways for us to move money and think about money as well. And I think there's a number of different cases that come to my mind, but I will say that one that stood out is in the US, we have this neobank FinTech called First Boulevard. And once again, bias, Visa is a big proponent of First Boulevard. And they are specifically focused on really bridging the generational wealth gap for Black Americans. And there's many ways that they're able to do this. So they actually have an app which actually offers education for Black Americans, especially around crypto. And what does crypto mean? How do you get involved? How do you access crypto? It also can help them with actually sending money back to their homelands, for example, in Africa, as you said, just by mobile to mobile payments. So all these different ways within this app environment, all empowered by a FinTech. For me, I find that just one of the most empowering ways to think about FinTech and what it really is doing for the consumer. Think about yourselves here, and everyone has different backgrounds and means, but you just think about yourself and think about your week. Think about how you're able to pay for your meals, how you're able to help others that need financial help, or even get to work. FinTech is helping with all of this, and it's actually able to do more. And I feel what is really exciting is how do we think about more use cases that can enable better social good. Another one I'll actually add is, because everyone loves crypto, think about how NFTs can help with the mortgage process, so through smart contracts technology, and think about how those who have been predominantly shut out of home ownership can actually get involved via NFT involvement and understanding the blockchain technologies behind that. So these are just so many, if just tip of the iceberg in terms of the use cases for how FinTech can actually drive social good. And I'd love to hear from fellow panelists and anyone else on how they're thinking about this as well.
Thank you. And the point about NFTs is really interesting. Actually, I've worked with HSBC and Australia National Bank about that. Actually, you mentioned mortgages. Real estate is one of the areas where NFTs are being used. I'm somewhat that there are issues, I think, significantly with it, and they may be a little bit more hype, but it'll be interesting to see how that goes. So that was an interesting thing to bring in. But Nitin, would you like to add anything onto the social? Because I'll then come to Georgia and ask her a little bit more about perhaps M-Pesa kind of technologies, those things that we touched on around the world, and how we already saw, for example, with M-Pesa, how quickly, moving up using, effectively the SMS type technology to create a payment system that leapt over a lot because they didn't have fixed line telephones much in parts of Africa, and all of a sudden used mobile telephony so well. So I'll come to Georgia in a moment on that, if I may, Georgia. And Nitin, do you want to add anything on this?
Yeah, absolutely, Professor. If you look at even from a BlackRock perspective, like today, all the organizations should be socially responsible. Whatever decisions which we are making in the investment ecosystem, in the financial ecosystem, it is so crucial that we take into consideration that we are sitting with a huge power, in that with power also come a lot of responsibility, and how the companies don't abuse it and how it is used for the better good of the world. And I think the certainly a core of what BlackRock does. social responsibility is very, very important in every investment decision one makes. I think we have seen over the recent years how ESG has become a very key topic of investment. Like when you look at investment portfolios, the investor community is coming to us and saying they would like to have the ESG angle to their investment portfolio. And that's what, I remember when I was in New York to work with the World Bank and coming up with an algorithm which looked at ESG even at a country level, that what they were doing. So everyone has to play the part. And if everyone does play the part, then you're leading it to a better society, because technology certainly makes things a lot more accessible to even like talk about, Georgia, like in India, like looking at how technology has enabled someone in the small villages to now do the money transaction, now to have a card, now to have a bank card. It's a huge game changer to what it is doing and what it's empowering people who were usually living in a cash in hand kind of economy is gone into the digital model. So I think all the organizations would have a huge role to play. And I think what we're also finding is that all this is going to come across in the investment thesis, that when people are investing, the newer generation will actually give even more weight to companies who are socially responsible, who are keeping this at top of their game, and they will get more funding. They'll, I believe, might even be more profitable because a lot of people will align with what they're doing. Thank you.
Thank you. Yeah, really interesting. So Georgia, if you can give your comments and like I said, think about that international context, it'd be great, because I know, as you say, you're off to India right now.
Yes, I mean, and again, I apologize for the noise behind me. I think that what's really interesting is precisely what you've mentioned. Well, what the three of you has actually mentioned, in the sense that there are some leaps and jumps in society that have been made thanks to FinTech, whereas it would have taken years and years of a structural transformation of the economy to lead at the same result. And M-Pesa is exactly the type of example that I think is prominent to our mind. So for those of you who are not familiar with M-Pesa, M-Pesa is a mobile money service that was pioneered in Kenya thanks to Safaricom. And what happened is that it brought online, using savings and loans, many thousands of poor low-income families in Kenya, and then it very fast spread over sub-Saharan Africa. And I mean, and then let me just kind of not just praise the FinTech word, but kind of say something also about what some of the downsides of this approach have been, especially with people with low financial literacy. I mean, one of the things that studies have shown is that in the medium term and long term, especially when consumer protection was not super tight, the service led to overborrowing from a number of people. So in some sense, I just wanted to circle back to what Vera and Nitin had just mentioned about the social good, the sustainability of the model, which however should be paired, and this is somehow also where the research in development finance is going now, precisely to consumer protection, to try to understand what are the pitfalls, even psychological biases that people have. I mean, everything started from some sort of puzzling evidence that people don't invest in the stock market, even though they have wealth, and this comes from high-income countries, right? But then the behavioral finance literature developed to a point that now it's really like into understanding what type of nudges can help people repay more or not fall into debt, whether having too much cash in hands and move them into some sort of a mobile wallet can be optimal, and what is the optimal allocation. So I think that, I mean, from a researcher perspective, I mean, there's such a huge field of unexplored research questions that is, however, I mean, shown through evidence that there are like lots of things that would really make sense to study, especially when people don't have as high financial education as one would expect. So yeah, I mean, just to go back to the international context, FinTech has immensely improved the life of both households, so consumers, but also small merchants, think about corner stores that now can enable payments and people can just pay with them even for small amounts of money. And there are papers like showing that in South America that has incredibly worked out well for small businesses. So there are a lot of gains. However, one should be wary about the potential downfalls that can be determined by people's, again, lack of financial sophistication, lack of literacy, but also like impatience that sometimes leads to overconsume, overborrow, and especially comes very easy when you have just a phone to pay and to use it everywhere, right?
Thank you, Georgia. And I should say that I mentioned at the beginning how fantastic the Warwick Alumni Network is, but we have got in the audience the head of digital delivery for M-Pesa in Africa. So it's a fantastically talented audience as well. I'll now move to another question actually from the audience, which I think is interesting and related to some of the things we've talked about. There's been a lot of work. We've talked a little bit about cryptocurrencies and a lot of interest in crypto, of course, and some people saying what else outside of that. But I think so many great questions. I just had to pick one that was easy to ask, maybe not easy to answer. But what would you say the metaverse and Web 3.0, would you say the metaverse and Web 3.0 will be game changers in FinTech? And I think it's a very interesting question, that because I know some organizations working in that area, and I've heard Sir Tim Berners-Lee talk about Web 3.0. So it's, combining that with the metaverse could be quite interesting. So perhaps I'll go to Nitin, if I may, first, but feel free to bounce that on to somebody else.
Yeah. I think as you said, Professor, easy question to put, but very difficult one to answer. And I think that's certainly where I sit on the camp. I'm kind of continuing to educate myself, and it is interesting that how much these technologies are being talked about and how it's being implemented and where it would go. I think maybe the couple of years to come now, it'll start to become more clear what potential it has to play. But I certainly right now sit in more like standing and educating myself that what this can and how can this, and also how can this also be embedded into the traditional ecosystem of the financial system. Like there's certainly room for it, but how would that work would be yet to be seen. And I think that's also, without delving too much into the other topics of like the crypto, etc., I think a lot of work yet to happen before it really becomes like a mainstream where it's the education element, the understanding that itself. I think we were talking among ourselves before the panel started that yet like there's a lot of confusion on the consumer side of this technology, of what it means to the end user, and a lot needs to be done at that angle first to really say, when you see these 20 companies and next to them is a traditional bank, like let's say, Barclays, what is the difference? And how do you understand what it means for me to look at that or not look at that? And I think that all has to go. So I do apologize, not the answer, but that's kind of my view. I'm sure there are more people with experts here to tell us more on this.
So some great thoughts there, Nitin, thank you. Vera, you got any thoughts on that? I'm sure you're big in the metaverse, right?
I wish. I would love to hear from me putting it out there, but if anyone's super good at this and expert at this, please reach out to me on LinkedIn. I'd love to know more, especially for the moment. But yeah, so I mean, one thing that really shocked me was when I saw that JP Morgan has actually now, one of the biggest banks in the world, has opened a lounge in the metaverse. And they've also betted now, if you've seen the news, they feel like the metaverse opportunity is worth 1 trillion per year. And we're seeing that there's an increase in the amount of involvement of financial institutions. I mean, here's the thing, guys, if the likes of JP Morgan is betting on this, it's only so long that all the banks, their competitors, their clients will be thinking something like that, right? This is my thing. Just to show you guys that game changer is probably an understatement. It really is something that all of us here and also clients alike should be thinking about. What is your involvement, number one? Number two, if I want to get involved, how much do I want to get involved by? Number three, what are the use cases which really to help me define my involvement? There's so many things to be thinking about. And I love how Nitin is saying, I'm taking the time to educate myself. I feel that's the role that myself and many of us should be playing in the FinTech ecosystem, not just for the benefit of our clients, but also for ourselves. How can I personally involve myself, you know? So I think it's really important. And I do agree there. I think one underlying thing that came to my mind that George has kind of talked about is the lack of education that we're having towards this. And I feel a personal responsibility myself, and also, you know, encouraging peers alike in this FinTech interest to be, you know, really putting the word out there for people to know what is the metaverse, what is Web 3.0, starting to put out the word there so people can know how, if at all, they can really try to get educated. I feel it's only going to grow, and I feel we all need to somehow be aware of it. And I just think it's really important that we kind of push out that as a responsibility as well. Yeah, it's only going to grow, guys. That's my view.
Great, thank you. And Georgia, have you got any final comments on that?
I just wanted to say, I really like hearing from our other panelists about this idea of getting familiar themselves with everything, right? And also figuring out use cases. And somehow what I wanted to say is that, me as a researcher, but I'm also affiliated with the Gilmore Center for FinTech at University of Warwick. We are a group of people at the University of Warwick Business School doing research precisely on FinTech. It's an interdisciplinary type of center that merges a lot of skills ranging from IT, data science, finance, physics, and engineering as well. And I think that, that's kind of the approach that we are undertaking, in the sense of helping also the industry and the stakeholders to really estimate and evaluate rigorously those use cases to provide evidence of what works and doesn't. I just wanted to kind of bring this up, especially because we still are in the process of collecting rigorous evidence, and it's great to see how many research groups, especially at Warwick Business School and the University of Warwick, are doing research on that.
Super. I will just ask, so you're all far too young to remember some of the things I remember, but I just will tell you that the metaverse is quite interesting, but it follows notions that have been around for a while. These things sort of come around, and timing is important for technology. So you can have a technology that seems good but doesn't go anywhere because the timing's wrong. What I would say is, just on the metaverse kind of idea, here's an interesting thing that probably nearly 20 years ago, there was a popular game in China, and you earned points for being experienced and for winning battles. And there was a case of somebody where they got a super weapon, right? And they proposed to sell that because just over 20 years ago, eBay started, and there was a similar version in China in the early 2000s. And what they did is they sold this digital asset, this weapon.
Wow.
Yeah. The only bad thing was they were a little bit greedy and sold it twice. So for the first person, they dropped it in a room and the person collected it and they got their money. The second person, of course, they didn't have it now. And most interestingly, this was a crossover between the digital and physical worlds, because they didn't have the weapon. Actually, the person who was supposed to buy it murdered in real life, not in digital life, the person who was supposed to sell the weapon. Right. And this was interesting about digital assets. And when I say that you're all a bit younger than me, you may not remember something called Second Life. And I remember Second Life, where people did buy assets and lands. You could buy islands and such like. And people did make, I do remember the story of someone making the first $1 million. And what they were doing is something similar to now, for those of you that play or have children or nephews like myself and nieces who play Fortnite. You could buy clothes and digital assets, and somebody converted those Linden dollars, because you can buy Linden dollars and take them into a fiat currency, and actually sold that. So that's quite interesting about where do we learn from what happened before. So we may see some interesting things in the metaverse. On the Web 3.0, of course, this is where, you know, Web 2.0 was user generated. Web 3.0 is really user owned, right? We've all got our own assets. Don't give Facebook and Google all of that information. Instead, we keep it ourselves and we release it as we choose. And the important thing around that, so I'm just commenting on what you've all said, really, is education is important, because you put great responsibility on individuals. We moan about terms and conditions when we sign up to a website, but how many of us can really understand all of that?
Absolutely.
So it's no good empowering people if we don't educate them. So I thought there was some really excellent points there. And
also, like what Professor, I'll just add one point. It's also sometimes realizing when there are companies out there which are doing something they should not be doing. Like when we even look at the data, how the data gets used of people, and you know how accepting cookies is nothing more just a tracker to track what you do. And they don't call it tracker because tracker would be psychologically wrong thing. And people were like, oh, I don't want you to track me. And in the new world, people will be a lot more conscious and be able to hopefully identify when someone's not doing the right thing, and then, you know, call it out that your responsibility is being challenged. And I think hopefully in a world where people are more open, more transparent, and I think transparency is what I certainly think this world is heading toward. Things will be a lot more transparent in how they're being done and how they should be done, which means that people make their own conscious decisions and not get, you know, illusioned by something which they can't understand. Just like legal terms and conditions, you look at a 50-page and you say accept, and there could be just that one terminology where you've just written your life in some cases and you don't even know. And they said, that's the legal term. I said, I did not knew that subtle term. English is not my first language, which makes it worse. So there you go. So yeah.
Thank you, Nitin. So an excellent way to close that, Nitin. I'd like to give sort of 30 seconds to a minute to Vera and Georgia just for some final comment, because look, I can't believe it's 2 minutes to the hour already. So Vera first, and then Georgia.
Yes, I just put my details in the chat. Look, as you can tell, and we've just said, I think the key takeaway is let's keep learning, right? And I think that's it for me, and that will be me forever with FinTech. I think that's what draws me to FinTech. It's always changing. It's so dynamic. It means that I need to always be dynamic and ever changing in my understanding. So feel free to connect with me. I don't know, I'm not speaking for the rest of the panelists, but I'm sure they'll be the same.
Yeah. Absolutely. And I think there are people who know a lot here. Please, if you could educate us, please ping us. We could learn a great deal. And hopefully we can all learn from one another.
Exactly.
Right.
That's what Warwick is all about.
That's it, guys. So good to connect, guys.
Georgia.
Yes, I'll echo my fellow panelists in this idea of learning and learning. Again, I will never be tired of stressing about the importance of achieving and gathering rigorous evidence. And as academics, we have, of course, the duty to provide that with A/B testings, partnerships, and impact evaluation, and rigorous studies using secondary data, but also models. So again, like, I'm not writing my contacts, but whoever wants to get in touch, I'm really happy to bring the conversation forward.
Thank you so much. And thank you to all the panelists for great work. And thank you to the audience for great questions that were submitted before. And I'll apologize, first of all, to Ola, who did submit beforehand, but we didn't get to those questions, and people who've submitted now. We'll try and see how we can at least give some insights to some of the answers of the questions that people have raised. And I'm so sorry we couldn't get to every question, but this has been really exciting for me. I think it's been a really rounded discussion. It has been a discussion. I think it's a topic, as you said, Vera, that will go on. You know, it will definitely impact all of our lives. There will be some lessons to learn, and that's why it's important that through the alumni network, whether you're a student now or an alumnus, please make sure that you use each other and continue, as Georgia said, to continually learn and improve yourself. And then we can hope to make the world a better place. So as I mentioned, this is just one in a series of talks. So this event has been recorded and a link will be sent to everybody afterwards by email. You can share that with others that you think may be interested. We would, however, be grateful if you could spend a few moments to complete a very quick evaluation survey. That helps us make sure that the events that we put on are of the most value to you, and it includes details about opportunities for you to be involved in some of the future alumni engagement activities. I think somebody's going to put the link in the chat. I'd also ask you to watch out for our alumni e-newsletters for information on upcoming events. So we've got a Resonate Festival on the 19th to the 21st of April, and there'll be a wide range of events, including a family day and some famous faces speaking. So thank you again for your time. I'm so sorry that I've run over by 1 minute, but it's so exciting. So sorry to the alumni team, sorry to all the audience, but I look forward to seeing you all in the future. Thanks again, everybody.